Okay, everybody, it's me, Gregory Mannarino. It is still just lovely. It's always lovely, beautiful. Absolutely. All right, look. Monday, November 7th, 2022. Let's talk, you and me, some kind of freaking thing today. How about this? You watching this market? Very lovely. Positive earlier in the day, came down, market started to sell off, and then, just as if on cue, here comes the Central Bank of Canada. And the Central Bank of Canada wants you to know that, hey, moving forward, it looks like we're going to start slowing the pace of our rate hikes. Bam! Here goes the market higher. Look, this is the game. Regardless of what the creature supreme, you know who the creature supreme is? This is a new thing, all right? I don't know where this just popped into my head. So the creature supreme, I'm referring to Yellowstone Powell. He graduated to creature supreme. Now this thing here, we know the game. He says, oh, yes. We central bankers, we talk all the time. Oh, yeah, but we don't coordinate. Oh, no. When he made that announcement like 2 or 3 FOMC meetings ago, I mean, it's astonishing to me how he goes out of his way to say, hey, we talk. Oh, boy, do we talk. Oh, yeah. And but we don't coordinate. Of course they coordinate. Now, not only do they coordinate, but you have to understand that everything that a central bank does, says, whoever they float out, it's all scripted. It's all pre-planned. Now today, of course, they wait for the opportune moments. And just like, today, look, market started to sell off. Oh, no, we can't allow that to happen. Okay, Bank of Canada, let's come out here and just float out the story that moving forward, we're not going to be so aggressive raising rates. Look, the narrative is changing. Clearly, the narrative is changing. To me, at the last FOMC meeting minutes, read them for yourself. They didn't sound too freaking hawkish to me. As a matter of fact, my takeaway is, yes, indeed. Moving forward, central banks, the Federal Reserve, is going to, start toning back whatever their rhetoric with regard to asset purchases. They're going to slow down. Look, we just got a 75 basis point hike out of the Fed. We got the same thing out of the European Central Bank. Next month, I'm going to tell you that I believe we're going to get 50. I think we're going to get a 50 basis point hike, and they're going to start telling you more and more. Listen for it. Inflation is getting better. Oh, yes. Despite what they're going to tell you out of one side of their mouth, the other side of the mouth is going to tell you a different story. So what did we find out today? Food inflation continues to surge. Let me say this real quick. I believe sincerely on everything that I'm looking at right now, and again, I want you to put this together in your own head. Energy, I believe, moving forward is going to be the spot to be. And you could look at big energy companies. You can look at the exchange-traded fund, XLE. Energy, to me, moving forward, is going to be the place that's going to make a lot of people a lot of money here in this market. Financials, too. You can do that, too. Look at the big banks here. Look at the XLF. I mean, these things, it's going to turn around. And it's XLF and XLE, actually, these two exchange-traded funds, just go look at these things, all right? They've been in a screaming uptrend for quite a while. Not going to stop. As a matter of fact, it's going to get, I think, dramatically worse or better, depending on what side of that equation you're on. But the takeaway here is energy. Start looking at energy, in my view. They're going to punish people, and using energy as a weapon or weaponizing energy against the people is definitely a way to bring people to their knees. Having them pay exorbitant fees. My European friends are going to get hit the hardest, I think. I really believe that. Here too, in the United States, other parts of the world, we already heard from OPEC. The world cannot live, this is OPEC, without oil. Let's raise prices. So you could count on energy prices going much, much higher here. No doubt in my mind at all. So this market today, on the back of this announcement from the Bank of Canada here, Central Bank of Canada, dollar weaker. You're watching that 10-year yield higher. The MMRI just a shade under 290. Look, if they don't get a handle on this, if central banks don't get a handle on stability in the debt market, I mean, it's really just freaking over. And I think you all know that. They're pretty crafty, these institutions. So what are they going to do? They're going to continue to inflate, in my view. They don't have enough people sucked into the system yet. They got to create more people dependent on the system before they completely melt it down. So it just makes sense to me, looking at a lot of things, that the narrative is going to change, which it already is. Central banks are going to lighten up on their aggressive stance on rate hikes, and I sincerely believe we're going to see a 50 basis point hike out of the Fed, probably the ECB, then probably a pause, and that's the most likely scenario moving forward. But again, what is this all predicated on? The debt market. What's the driver of it all? The debt market. You know that. Anyway, let's move forward. So a nice rally here on Wall Street after the Bank of Canada announcement. All right, still MMRI higher, a 10-year yield not looking very pretty here. Dollar weaker. You know, when you see that, when you see, let's say for example, like today, 10-year yield a little higher, and the relative strength of the dollar weaker, that, like I've been explaining to you, is a compensatory mechanism. They weigh against each other, and this will affect directly the MMRI, Mannarino Market Risk Indicator, with two nice little charts on it. Again, link in the description of this video. A lot of you wrote back and said you like it. Well, pay attention to that thing. I think it's quite a little freaky, ingenious thing over there. Anyway, gold and silver did okay today. Cryptocurrency is doing well as well. Crude under a little pressure, but again, let's watch energy, you and me. Energy, 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 energy. Do you think? Let's just get a consensus here, and I want you to comment. Okay, so get ready to comment. Do you think, gauging from the current environment, that energy, the price of energy, is going higher or lower? Let's say short to medium term. Higher or lower? What's your consensus? What's your take on energy? You know mine. It's going higher. Okay, we'll see if that turns out to be correct. Now I want to share a couple of other things with you here. So this is I don't think a surprise to anyone that follows this blog, but it's very sad to see this. So U.S. small businesses continue to struggle. And we're seeing more U.S. small businesses having to close down. Two factors: a lack of customers, and two, they cannot afford rising rent. Rents are going parabolic here, okay? But corporate America, these big institutions, you know, the military industrial complex, doing great. It's doing fantastic. Look at the stock market. The S&P 500 today is about 20% off of a record high. 20. That really, in the grand scheme of things, it's really not bad. It's really not bad at all. Anyway, this is something else I want you to listen to. So central banks, they just hit a record high with regard to gold purchases in 2022. It's pretty interesting here. Not just that, but private investors bought more gold ever. We hit a new record 2022. I think that's kind of interesting. Now, here's something else I want you to pay attention to. Most of you know who this guy is. If you don't, that's okay too. But billionaire Sam Zell, he's a straight shooter. If you listen to this guy talk, he's not afraid to tell people what's going on, and I love that. He's also he's a multi-billionaire, so I don't think he really cares too much. But this is a quote here: "A liquidity crisis is coming." Does that remind you of anybody here? Maybe me and you? Because we clearly understand that is exactly where we're going. Into a full-blown liquidity crisis, meltdown of epic proportions in the debt market, which is the driver of this all. And what do you think is going to come out of that? Look, People here are whistling past the graveyard. They really are. And this issue with the debt market instability, what central banks are doing here, and it's not going to stop. Look, even if, and I've been talking about this, let's say central banks, the Fed says, hey, you know what, we're not going to raise 75 basis points, we're going to go to 50, then we're going to pause for a little bit. Is it going to stop? Do you believe that global inflation is going to stop, that central banks are going to stop inflating? It's just going to miraculously turn around? No. It's going to continue to balloon because it has to. That's the nature of the beast, the nature of the debt-based economic model, that central banks continue to inflate. It just can't stop, ever. The moment that this stops, it implodes. The moment we prevent the Federal Reserve or any central bank from issuing one single dollar more debt, they implode. There's their Achilles heel. How do you want to tackle that? With our present politicians in place, all of them, last administration as well, the one before that, all they've been doing is empowering central banks, their own central banks, making them more powerful every single day by allowing them to inflate and inflate and inflate some more. It's just lovely. It's just absolutely freaking lovely. Anyway, so that, my friends, is the story. So, what's the takeaway from all this? Number one, let's watch this global debt market issue. Keep your eyes on the MMRI. We're like 10 points away from 300. You remember what happened the last time the MMRI crossed 300? What happened? They floated out Nick the Pig, the Oink Man, and Oink Woman to say, hey, moving forward, oh yes, Federal Reserve, they're going to start easing back, and they're going to not be so aggressive with their rhetoric here. And central banks are going to start, not being so aggressive and with their rate hikes. And we just heard the same thing out of the Central Bank of Canada. Make it up. Make any of this stuff up. All right, look, this guy here loves you a lot. I mean that. Please share this video. Get it out there. Let me know what you think. I will read the comments, and I will absolutely see you in the morning.